The story of Mr. Market is arguably the most famous parable in stock market investing. It has been used by the most famous investors in the world to describe the irrational and often contradictory traits of the stock market. In this video, we will explore and understand how we can use Mr. Market to our investing advantage. Benjamin Graham, the author of the book The Intelligent Investor, conceived Mr. Market as a clever means of illustrating the need for investors to make rational decisions about their investment activities instead of allowing emotions to play a deciding role. Mr. Market teaches that although prices fluctuate, it is most important to look at the big picture rather than reacting to temporary emotional responses. Graham says, the intelligent investor shouldn't ignore Mr. Market entirely. Instead, you should do business with him, but only to the extent that it serves your interests. Mr. Market is an imaginary investor driven by panic, euphoria, and apathy on any given day. In The Intelligent Investor, Graham asks you to imagine that you are in a 50-50 business partnership with Mr. Market. Mr. Market has massive mood swings and frequently offers to sell his half of the business to you. When Mr. Market is in a euphoric mood, he offers his shares at very expensive prices. Other days, he is massively pessimistic and offers his shares at cheap prices. Therefore, Mr. Market is like a pendulum, swinging from overly pessimistic to overly optimistic. But remember when dealing with Mr. Market that transactions are strictly at your option. If you decline, he will always come back with another offer. Taking advantage of the pendulum swings will offer you the chance to buy low and sell high. So what do some of the world's best investors say about Mr. Market? Adjunct Professor of Security Analysis at Columbia Business School and co-founder of East Coast Asset Management, Christopher Beck, says, Mr. Market's most dangerous foil tactic is placing silly valuations on businesses, which encourages further speculations, driving the tide so high that bubbles are formed. Investment legend Seth Klarman, who runs Boston-based hedge fund Bellpost, says, if you look at Mr. Market for advice, or you imbrue him with wisdom, you are destined to fail. And Chris Mayer, the author of the book 100 Baggers, says, if you're patient, Mr. Market almost always gives you a good chance someday. The question is more, will you have the courage to take it when it comes? Mr. Market creates ups and downs in stock prices all the time, and prudent fundamental investors are unfazed by them because they are looking at the larger long-term picture. They subscribe to the notion that in the short run the stock market is a voting machine, and in the long run it is a weighing machine. Greed and fear are now well accepted hallmarks of advanced capital market systems. The herd behaviour of these markets and the individuals populating them can at times gravitate to certain stereotypes. One such stereotype is Mr. Market. Therefore, when investing, it is important to follow our Spock brain. We discuss this in the video Behavioural Investing with Mr. Spock. Warren Buffett has frequently advocated investors heed the lessons of Mr. Market. It is a lesson that he has shared on several occasions with Berkshire Hathaway shareholders. He says, Mr. Market is there to serve you, not to guide you. It is his pocketbook, not his wisdom, that you will find useful. More than anything, Mr. Market is a lesson on what not to do when trading and investing. Mr. Market is prone to fits and starts based on emotions, and is usually the one who sells at lows and buys at the highs. It is all about stacking the odds in your favour by understanding Mr. Market and patiently waiting for him to make you a deal that you simply can't refuse. There you have it, an investing masterclass about how we can use Mr. Market to our investing advantage.